This month's market volatility has led to some growing investor anxiety, but according to a survey by the American Association of Individual Investors, market optimism has been below average for most of this year. Here to discuss, Charles Rotblut, Vice President of the Association and editor of the AAII Journal. That's not what I would have thought, Charles, although a lot of people have said that this rally has been one of the most unloved, and a lot of skeptics have abounded through the entire move, I guess. Is that confirmed by what you're telling us here?
Yes, it's what we've seen most of this year, and even last year we saw optimism being below average on many weeks. I think a lot of investors right now are looking at the headlines, worried about it, particularly the trade war. That's on the front of a lot of investors' minds. They're also worried about maybe the economy is not as strong as the numbers suggest. And I think overall there's a lot of angst about whether or not the market can continue to trade at current multiples versus having a big pullback. And, I think to a lesser extent, last year's volatility and even some of the volatility we've seen this year is staying at the forefront of many individual investors' minds.
I wonder what else it is, Charles. I mean, it's so many things. Obviously, it's the length of the expansion. It's the length of the bull market. I guess it's valuations. It's the idea the business cycle is going to go down. But let me ask you just whether there's any truth to this. President Trump, even though he has a good economy, solidly doesn't get the approval ratings that you would think someone might get with this economy. There's a solid, I would say, 45, 50% of people that will never really be comfortable with President Trump's tweets or him being president. Can they say I'm bullish on the economy and bullish on the market and have that viewpoint or that that visceral feeling about Trump and it sort of justifies? It's almost like selling out if they say, wow, I think the market's going higher with this guy. They can't do it. They can't physically or mentally get on board with this because of the guy who might take some credit for it.
Yeah, it's interesting you said that because I've been at the association 10 years, and I've seen far more mentions of President Trump in our weekly survey than I ever have of President Obama. And even when we ask questions that are not at all related to the administration, his name comes up. And we do see a divide that we see in political polls where some people really support him. But we do see other people who say, the economy is really good, but I'm worried about the administration. I'm worried about the administration's policies. So that political divide is definitely showing up in our survey, particularly in members' comments. And I think that's just more representative of what we're seeing at the broader scale across politics. And obviously, President Trump is not afraid to get in front of the camera, not afraid to use his tweets, and certainly not afraid to be outspoken.
That's pretty crazy, though, the whole notion, because going back as far as you can at Jesse Livermore or whatever, the market doesn't like to have too much complacency around, and it got to have a lot of things to worry about, and wants to keep as many people out as it can. So for some reason, when it's going higher, and that's the perfect way to do it. Every time Trump tweets, it's like I'm not, that could help the market maintain a certain degree of healthy skepticism, which is a crazy unintended consequence, I think.
Yeah, and the headline really drive a lot of sentiment. So people see the headlines swing in both ways: volatility, events in the trade wars, inverted yield curve, and all that affects what people think over the short term. But we really try to coach our members to really think long term and remember they're not like professional managers where they have to worry about what their performance is over a 3-year period. They're really investing for the rest of their life, and it's really a different time frame. And we try to get them to think about what you need to last throughout retirement, not what you need to earn this quarter or next year.
Charles, do you think that the worry or angst or anxiety would go up if Bernie Sanders looked like he was going to be the next president, or someone from the far left? They've had, Stan Druckenmiller's on, said the market would go down 40% if Bernie Sanders was elected president. I mean, then I think you'd see some real anxiety, no?
Yeah, I don't know. I think it really depends on who the candidate is. Certainly when you looked at when President Trump was elected that night, a lot of people were expecting the market to drop, and then we had a huge rally starting the very next day.
Right.
So, and I think it's also important to realize that if you have any candidate of either party that really has some radical policies, they still have to get through Congress. And you can look at President Obama with health care. He barely got the Affordable Care Act through, and he really had to twist a lot of arms within his own party. So I think some of these policies and proposals that might be a little bit further out there, a little more radical, are really going to have a harder time getting through Congress, even if one party controls all three parts of government.
All right, Charles. Thank you. From the land of Chicago,
you
know what you're talking about. All right, thank you.